Hello, hello. Similolu here. Welcome to my Saturday morning live stream. Once you come into the live stream, just let's see you, say hi. Just give it a few more minutes, 2 minutes max, and I'll start. The topic for today is knowing when to enter into a trade. Very, very important. So if you're in the room, hey, how are you, Betty? Good to see you. I hope my glasses are not giving too much of a glare. I use those glasses in front of a computer. Welcomes. Good to see you. So where are you streaming in from, Betty? Okay, let's know where you're streaming in from, Betty. Just type that in the type that on in the chat, and I will actually get started. What I like about live streaming is even for those who can't make the live stream session, there's always the replay of the live stream session. So if you don't catch it now, you can catch it later. Hi, Betty from Kenya. How are you there? I'm thinking it's probably about 5 p.m. over there. Here in New York, it's just 10. No, did I say 5 p.m.? I'm thinking it's like 3 p.m. Hi, Michael. It's good to see you guys. So I'm just going to get started, and I feel the topic for today is quite important. Everybody at some point was a newbie, brand new to trading. And one of the more important things, I believe, we all want to make money trading, but we don't always make money trading. So what we do is we're constantly trying to learn and improve our techniques. And the biggest and first area where you can improve is when to enter into your trades. Because as you all know, you enter in at the wrong time when the market is reversing on you. Well, it reverses with your money. And so the whole point is to be able to interpret the charts to a point where you can enter in at the right time. And so I'm going to spend the first I try to keep it below 10 minutes, just going over this basic topic of the week, which is knowing when to enter a trade. So I am using a different app today, hoping I can maybe kind of annotate on the screen as we go along. So I captured this screen yesterday, and we can see here probably the most important. I feel there are so many most important things to do when trading, but one of the most important things, or one of the very first things you want to do, is to know what the trend is. That is gold. What is the trend? Is the market uptrending? Is the market downtrending? And the best way to look at the trend is always, always, always on the higher time frames. It's got to be always on the higher time frames. Right now, I have this on the 15-minute, but ideally, you want to be looking at your trend. You know, think about when there's a saying that says you can't see the forest, you can't see the trees for the forest. So, or you can't see the forest for the trees. That means if you're so zoomed into a forest, all you see are the trees. But when you kind of get this like aerial view, then you actually see the bigger picture, the whole forest. And the same goes with trading. You got to know what that bigger picture is, and you always do it on the higher time frames. You can use the daily. That is golden. You want to see what's going on the daily. Now, if the trend is upwards on the daily, as we can see here, this last few, well, this is a 50-minute chart. So let's pretend it's a daily for now. This would be a whole day. The 1, 2, 3, 4, 5. The last 5 candlesticks would represent 5 days of upward movement, which is a great time to enter into a trade. Now, if we look at this, the first section here, let me try and draw an arrow. Let me see if that works. We see there was an upward trend, and then at this point, there was a reversal. So that is something for another topic, to identify when there's an imminent reversal, because you enter in a trade when there's going to be a reversal, then it's reversing again with your money. And that's one of the things we want to reduce that. We want to increase our likelihood of making a profit almost as soon as we enter a trade. I like to see green when I enter a trade, and I think most of us like to see green. Red is not a great color when you're trading. Except you shorten the markets, then you love red. But I tend to go long, meaning I'm looking for to make money when price increases on any of my trades. So that's the very first thing. Always check your trend. And when you're checking your trend, you're always going to check it on the you're always going to check it on the higher time frame. So let me move to another. What did I do with that? There. Do you want to save changes to? Yeah. So if we move into this second frame, now this is I moved it to what is this? Bitcoin and Tether. Okay, so this was last night, so Friday evening, and this is the chart on a daily. So this is awesome because you can see that over the last few days, the last candle that we see here is a Friday candle. So today's Saturday. So this last green candle is actually Friday, right there. And the point is, for the last 3 days, let me see, 1, 2, 3, price action has been trying to get above the line of resistance. And that line of resistance, or price of resistance, if you scoot to the right here, is $4,833. So Bitcoin has been trying to get past the $48,000 price point, but there's an obvious line of resistance. There is a force, and that force is actually created by sellers. So sellers have the, on automation. So people are camped out at this line of resistance. As soon as price action is, going to the 48K and above, they start selling. Selling always causes your price to go down. And that's what a resistance is. It's a tug of war between your buyers and your sellers constantly. So we, the buyers, we want price to go up. But the sellers, they make money when price goes down. So at this line of resistance, it's a tug of war. It's a question of who's going to win. When the buyers can outnumber the sellers, then we're going to have this situation here where price is just going to burst pass, or the technical term is break out is going to break out through the line of resistance, and that is always good. Now, I'm going to go to the third chart, because the fact that price action breaks above the line of resistance is not a good enough reason to enter a trade. I'm going to pull up the next graph. So what has happened here is the next thing you want to do after you are getting ready to enter a trade, you always want to go to your smaller time frames. There are a few times when I will enter into a trade on a larger time frame, and those are the times when I'm interested in entering a trade for the long term. So if I'm interested, and right now I'm interested in, my main focus is purchasing Bitcoin to hold. Once I buy Bitcoin, I'm not trading with the bulk of my Bitcoin. So once I buy Bitcoin, I'm holding 80% of it. And then I can trade with the 20%, but mostly I'm not doing a lot of trading with my crypto, with my Bitcoin, because I am on a quest to acquire as much Bitcoin as I can. So that's always a good thing. So entering into your trade, the fact that you have price action at the line of resistance is not a reason enough to enter the trade. We can see the first rectangle. Price action did move up. It did that. It got to the line of resistance. You don't want to enter your trade at this point, because what happened with the next candle, the sellers pushed the price right down. So you're waiting. I think I told you there's so many like number one reason, like so many reasons that sometimes it's hard to grade them. You know, you'll have the number one reason and the number two and number three. But with trading, I think I have like five number one reasons, 5 number one things that you should always make sure you do. And so one of them is you don't buy until price action closes. It's got to close. Price must close above the breakout. So the line of resistance is just, if you like, it's the starting line. We don't want to throw our money in at the start line. We want to be sure that that race is going to complete. And so these two red candles obviously have broken down below the line of resistance. So good reason why you didn't want to enter in this first rectangle. And so we're waiting, and then price action is moving back up again to price of resistance. Good, it's good. It's hanging out at the line. It's not breaking above it. So we're still not going to enter into our trade. Now, when we get to this arrow, I'm going to point these two boxes. The first one, the first candlestick, which is what is called a Gravestone Doji. So what happened is price action did break out. It ran all the way up here, but within the space of 1 minute, it didn't close. It then ran back down again and closed below the line of resistance. This is a prime reason why you don't buy a breakout until your candlestick has completely closed above the line of resistance. This didn't. So if we move to the second candlestick, the green one, it actually closes. You see, the second candlestick actually closed above the line of resistance. So do we enter into the trade? What would you do? I know you can see the red candles, but let's assume we can't see those red candles. When this green candle closed above the line of resistance, it looks like it's time to enter a trade. But the one thing I have personally learned is to wait for 2 candlesticks to close. You want to wait for not just this green candlestick to close above the line of resistance, you actually want this second one as a confirmation that price action is going to continue upwards. Guys, if there's no confirmation, you don't enter the trade. Many of us are trigger happy, and what that is, because that's how I describe myself. Sometimes when my hand is on the button, I'm more prone to hit it than to wait. So I have been bitten with this bug so many times, where you're so excited that price is moving up and you want to jump in there. But you know what? To be a good trader, discipline is probably another number one important thing. Discipline, you got to be disciplined. And that discipline will help you wait until 2 candlesticks close. So the first one did not close above. This green one closed above line of resistance. The next one closed below. So hopefully you didn't enter the trade, because what happens after that? That's what we want to avoid. We always want to avoid price reversing with our money, and it's not a good thing to see red when you're trying to make a profit and see green. And that's it. That's all I want to emphasize today. Next week, I believe I'll go over the best times to exit a trade, because that's another weak area where, when do we exit a trade? After you're in a trade and your P&L is green and you're making that money, you see it's moving up, when do we exit? So that'll be for next week. And at this point, I will take questions. Okay, so let me see. Hi, everybody. Hi, Mara. Hi, Michael. Hi, Betty. Hi, Rinret. Rinret Nina. Can't I just place a sell order at the resistance and make profit? That is an awesome question, because the topic for today is when to enter into a trade. So we're using our lines of resistance to let us know when to enter into a trade. So when we break above line of resistance and we have at least 2 1-minute, this is my strategy, 2 1-minute candlesticks closing above line of resistance, I will enter into the trade. I'm more sure that price will go up. Price can still reverse, because you know what? Nobody can predict the future. So anything can happen, and price can always reverse. But with trading, it's a game of chances. You want to improve and increase your chances of winning rather than losing. So what Rinret is saying is, should she place a sell order at resistance? When we're dealing with sell orders, you usually want to place your sell order not at resistance. I don't know whether to call you Rinret or Nina. You don't want to place your sell order at resistance. You want to place your sell order before resistance. And why do I say before resistance? I say before resistance because price the resistance is a ceiling. And if we look, I'm getting ready to draw some more on here. If we look at down here, price waited to get to resistance before reversing. You want to get into the habit of selling, and I'm going to draw a line. You want to get used to selling before your resistance. You want to place your sell order before your resistance. You stand... So this is what we have to do as traders. We have to learn to sell on the uptick. It's very hard, because when you see your profit and loss, you see your P&L, your profit, when you see it, increasing, you got $100, $120, $150, it's going. It's hard to sell, because you're thinking, this thing can decide to go to $1,000. This thing can decide to keep going. Why will I sell now? But that is the time to sell. You're selling when you still see all these greens. If you wait to the point of resistance, remember we said at resistance we have sellers. They're all camping out at that line. So if you wait too long, you will end up trying to sell when it's going down. And sometimes the system, there's so many sellers, so much trading going on, your order doesn't go through immediately. So you are losing money when you could have sold when it was still green. And that's a discipline we all have, as traders, have to learn. So your sell order, in answer to your question, Nina, your sell order needs to go before your line of resistance. So let's move on to the next question. I like that question, Michael. How does one determine how long a trend would last before a price reversal? That is an awesome question, because if every trader had the answer to that question, we would all just, if I know a trend is going to last 3 days, why will I sell on day one? If I know a trend is going to last 1 hour, why will I sell after just 20 minutes? That's the $1 million question. And what you need to study to be able to identify, the question, Michael, isn't how long a trend will last. The question is, when will the trend reverse? So as traders, we can't predict how long the trend will be, but we can look at the charts and we can look out for reversal patterns. And that's probably a topic that I will pick on to make a video on, identifying reversal patterns. Now I'm going to try to clear my screen here. Because you see this down here, does anybody know what pattern that is? That cross-looking sign. Anybody can identify what pattern? You can type it out. Let's see if anybody knows their candlestick patterns. Anybody want to hazard a guess? There are different kinds of candlestick patterns for those who don't know. So I have been making a series of videos on different types of candlestick patterns, because guys, when we look at the candlestick patterns, a doji, thank you, Nina. It's a doji. A doji is a symbol of a trend, an imminent trend reversal. Again, nothing is 100% with trading. Nothing is, even with telling the weather. The weather guys, they do their best, but sometimes they'll say things like there's an 80% chance of rain. Sometimes I guess they can see for certain that there's 100%, but most times they give you a range. And the same with these patterns. A doji is a symbol, is a pattern, or a candlestick, a pattern that shows the trend is reversing. And what happens with the trend? It goes from a downtrend to an uptrend. In answer to your question, Michael, that's how you know it's time to get out of the trade, when you can identify your reversal patterns. We have another doji up here. I made a video on different types of dojis, about 3 or 4 different types of dojis. This is another doji. Most dojis will have that cross symbol. What it's saying is price opened and closed at the same point. So with a red candlestick, price opens high, it closes low. With a green candlestick, price opens low and it closes high. With a doji, it's opening, it moves around, and then it's still gonna close at pretty much the same point. That shows that something is changing. If it was sellers that were dominating, as we can see sellers dominating here, then we're looking out for a doji as one type of reversal pattern. And Betty asks, which is the best time frame to enter a trade? 1 minute and 5 minutes. I think BTW, by the way, is that what you're saying? Between 1 minute and 5 minutes. Okay. So that's another one of these questions. Generally, generally, the way to interpret these charts is you use the higher time frames to kind of zoom out and get a better picture of what on earth is going on. Are we uptrending? Are we downtrending? At the end of the day, that's all we want to know as traders. Uptrend, downtrend. Or we also want to know if price action is ranging. That means it's going nowhere. It's going up and down, it's just going nowhere. Bitcoin ranged last year. I think the first part of the year, it was just ranging. It wasn't moving away from like under 10,000. The first half of the year, it was just 8.5, 9, back to 8.5, up and you don't ever want to enter a trade when price action is rating, except you trade options. Trading options, there's certain times of orders you place where you actually make money when price ranges, but that's not what we're talking about in this session. So which is the best time frame to enter a trade on? It's not going to be your higher time frames. The only time I will enter on a higher time frame will be when I just want to enter. I just want in on the action. That's it. I am not day trading. I just want to pick up more Bitcoin, or I want to pick up more of, I'm kind of heavy on Tesla stocks as well. I want to pick up more Tesla or whatever it is you like to trade. And I don't really care. Yesterday, throughout the last couple of weeks, Tesla has been trading, this is an example, at about $850. It's been ranging, $850, $840, $860. Yesterday, it came all the way down to under $800, like less than $800. So I entered into the trade because I'm a long-term believer in Tesla, not just Tesla, but electric vehicles. So I'm a long-term believer in Tesla and NIO. Okay, so these are electric vehicles. And so in that situation, I will just enter in. I'm not interested in large time frames or not. But if as a day trader, so the definition of a day trader is you want to kind of make some money on a day or within the space of a day. And for me, because I have other businesses I run, I have a time slot. So, and that time slot is usually between 9 a.m. in the morning and 12. I want to make some money between 9 a.m. and 12. And if there is no opportunity for me to make money, the best thing I can ever do for myself is not enter into a trade. But once I'm ready to enter into a trade, that's when I'll move to my lower time frames. That's when my lower time frames are going to do magic for me, because my lower time frames actually inform me of the best time to enter into a trade. And so now you want to use your indicators on your lower time frame. I enter into a trade on the 1 minute and the 5 minute. Again, I'm a day trader. If you're a swing trader where you are entering into a trade and you're going to be in that trade for more than a day, then you may not be too concerned about entering in on the minute or the 5 minutes. Maybe you would now be looking at the 1 hour, the 4 hour, and the daily to enter into a swing trade. So I hope that answers your question, Nina. Welcome, Mill from Amsterdam. What's your weather like over there? Over here in New York, we got snow on the ground, so nothing exciting. So, again, Nina is asking, as a day trader, what are the best coin pairs to trade? Or what are the factors to consider when choosing a coin pair to trade? Again, I don't know. Yeah, Nina, you're asking all these $1 million questions. What is the best coin to trade? It's not just about coins, though. It's about what is the best security to trade. If you're into stocks, snow in Amsterdam. I kind of expect it to be snowing over in Europe. If we're snowing here in America, then you all got snow as well. Again, that's $1 million question. If we all knew exactly what to trade, everybody will be trading it and everybody will be making money. Everybody will be making money. So that is a topic I've made a few videos on how to scan, how to find trades. I had a private session with someone yesterday, And that was one of the questions he asked as well. And he's into cryptocurrency. And I gave him 3 conditions under which you would enter into a trade. The first one, he said he made money off Ripple because he had a friend who told him, to enter into Ripple. And he said he made a couple of $1,000. Good for him. And he's actually, this young man I had a session with yesterday, is actually, he says he's 1 month into, just learning cryptocurrency. So he's a newbie. And so that is one of the ways of knowing what to enter in. When you got your ear to the ground, you got to be part of a community. If you're part of a community, you will know which coins are moving, because the community, especially if it's a larger community, if somebody is in on, some insider information that this coin is moving, if somebody is heavy on charting and they can read the charts and use the charts to interpret when price action is moving up, then you want to be in on that crowd. So that's the very first way that I use a lot, because I'm part of a few communities on Twitter. I'm part of a few communities on Telegram. I have my own Telegram group for those of you who want to be in on a community. I have the link at the top of the chat box. I'm not sure if you can kind of get to it, but yeah. So you want to be in on a community because you want to know when things are moving, okay? And also your community acts as your news source. Just like we turn on the news and we get information about what's going on around the world. Well, your community, they got their ears to the ground. So to make money, you want to be quick. You want to be in your trade. You want to get the news while it's hot off the press. That's when you're going to get these kind of moves. We want these kind of upward moves. That's when we jump in and we jump out. The second way is to subscribe to a paid service. So you're buying signals, and there are a few of those as well. If you want to know of some, I do just join again my Telegram group. I have a lot of gurus in my Telegram group that know a lot more about cryptocurrency than I do. They know a lot more about trading than I do. And so, the information is just flying around on that group. Join these other groups. Don't overjoin groups, because there's a risk, but be picky on which groups you want to join. And of course, it's not everything that is said. It's not everything that is said that you jump on. You always have to do your due diligence. That is so key as a trader. You got to be able to take the information and look at the charts and see if you can see what they're saying. If they're saying sell, why are they selling sell? Look at your charts and see, you see red candles jumping up all over the place, then sell. So that's the second way of knowing what coins to trade. And the third way would be study the charts yourself. Study the charts yourself. When you see things going on around, when you see a lot of price action around resistance, you see a lot of price action being rejected at resistance, then it's saying maybe it's time to get out of your trade. There are so many moving parts to trading, and I don't know a trader who just stops learning. You just constantly learning. If you have a strategy, if you have an indicator you use to enter into your trade, there's always another indicator maybe that works a little better than the one you use. Now I do use a few indicators to enter into a trade, but let's see what other questions you have. I have Mill, who just started 3 days ago. Oh, to follow my videos. Welcome, Mill, to my side of the, as a video content creator. Welcome to my world. Thank you that you're saying it's an eye opener. Yes, and knowledge is key in this field. And like I said, you're always learning. It's important that you're always learning, because there's always something new to learn. I'm planning on making a video on the Doge. I made money on Doge, and I didn't even know I had made money on Doge. So back in 2017, during the whole Bitcoin during the whole Bitcoin movement, I was heavily into cryptocurrency, and some of the people I followed were heavy into Doge, and so I picked up $54 worth of Doge, and I just bought it and I just left it there. And so for those of you who are in on the crypto news, you know what's been going on with Doge, how price has just kind of just increased, burst through the roof, so to speak. And I decided to look. I actually lost my location. So where I knew I bought Doge, I couldn't remember where I bought it. So after I dug around, I found it on some random exchange. I bought it back, 3 years ago. And my $54 investment had turned into over $400 as we speak. And I want to make a video on that. I feel what if instead of $54, what if I had invested, say, $1,000 back then? How much will my Doge be now? The increase, by the way, is 7,000%. So you all do the math, but that's the video I want to create for Wednesday. So subscribe to my channel so you get that particular one. Yes. Okay, and so even as we're live streaming, I see people are joining the Telegram group. Again, the purpose of the Telegram group again is because I really believe in community. I mean, we're a communal people. We humans, we do well. I mean, back in school, back in those days, we learned about division of labor. We can't all be doctors, we can't all be carpenters. And so that's why we live in a community, because those who are good at doing one thing, you want to rub off on them. So you'll have those in a community, a Telegram community, any social media community, who are just better at sniffing out news. They get news as soon as it comes off the press. There are those who are good at charting. There are those who are, just good. So you want to be in those communities, and you want to be very, very discriminate. So you can't afford to be in such communities and take on every single thing. It doesn't work, guys. It doesn't work. I was part of a community. It was on Twitter. Actually, I'm subscribed to quite a few successful day traders on Twitter. So that's another idea. They call it FinTwit. So it's like the financial part of Twitter. And so this guy, very seasoned, he worked on Wall Street for, I don't know, decades, and he was retired, and he was just he gave so much information. But one thing I found out, then I was a newbie, one thing I found out is when he enters a trade, and he enters his trade heavy, say with $20,000, and when I enter that same trade with $50, it's not the same. Or let's say I enter that trade with $300. When that trade is going against me, it's my one little $300. I found out I was quick to sell. The 300 goes down to 250. I'm like, no, I'm going down. I'm out of the trade. But as a trader, you have to be able to hang in there. So I usually will say, and I learned from this guy, don't trade with money you're not ready to lose. Don't. If you're not ready to lose it, don't trade with it. Now, he was an options trader, which is trading derivatives. With trading derivatives, you've got to know what you're doing, because you can lose everything, which is not so much the case when you're trading coins or shares. But it can happen. There are thousands of coins out there, guys. Don't just jump onto any coin. Make sure it's a coin that's going to be around tomorrow. Otherwise, if you're searching for your coin after, entering into it and picking up coins because some guru told you to, and then 2 months later, the coin is nowhere to be found, well, it's on you. So, Coin Market Cap. I love Coin Market Cap because Coin Market Cap allows you to, check out your coins and see their ranking. Like, what do they rank? Let me see if I can quickly pull that up. So Coin Market Cap. I don't know why it's so enlarged. Let me reduce this a bit. There it is. So on CoinMarketCap, guys, if you haven't been using CoinMarketCap, now is the time to start, because it's a reliable source to go to know what is ranking. I don't know what this is doing here. Model 3 Tesla, but it says 0. So, but you can see Bitcoin is always going to rank number 1 on CoinMarketCap. There it is. And you have all those other coins. Ethereum is always going to be number 2. And so you're looking at these coins, and as you go down, you see the more reliable coins, the coins that are more dependable, will ranked higher. Now if we keep going, I don't know how many coins are here, 5,000 plus. So if somebody calls out a coin and you go on CoinMarketCap and that coin is ranked, let's see. Okay, guys, look at this. That coin is ranked 4,002. And they say this is a great one at $1.16. I personally will not put my money in it. I mean, look at the ranking. It shows, the ranking obviously just shows, I guess, using a bunch of factors, why it's ranked, just like we rank anything. So you always want to stay with coins that are ranked pretty high. Yes, and then on CoinMarketCap, you can do a bunch of research. You see a little snapshot to the left here of, price action, just a snapshot. You can see whether it's green on the day, red on the day, and you can actually do a bunch of research. So if we look at this wormhole.finance and we click on it, and it actually gives you, a little information about the company. Here it is. You can do a little research, quite a bit of research actually. See how long they've been around, see, just different things that you need to look at, different metrics. Okay, so we'll take 1 or 2 more questions if you have any. And if not, I guess we'll wrap it up. So the main points to take away are, you always want to check the trend on the higher time scale before you ever get into a trade. Is it trending up or down? If a trade is trending up on, say, the 1-day time frame, if it's trending up on, say, the 1-day time frame, like if we look at this chart, we can see it's trending up at this point. So if we enlarge it, but this is the 5 minute, so let's go to the daily. So I'm on TradingView, by the way. So here we can see, let's see what we can see. So this, of course, is Bitcoin and the US dollar. And this is just it's such a beautiful chart. Why is it beautiful? Because look at that beautiful uptrend. So this is the reason why I'm buying Bitcoin and I'm holding. I don't want to, the guy I had a session with yesterday wanted to be able to buy Bitcoin and then, spend some of it. And I said, why would you want to spend Bitcoin? Because the value of Bitcoin is going up. So if you have 0.2 of a Bitcoin today, don't spend it, because in a year's time, that 0.2 that's worth, I don't know, say $1,000, it could be worth $5,000. You don't want to spend your Bitcoin now. So all you want to be doing now with Bitcoin, and that's what I'm doing, you just want to be hodling. HODL, hodl. You're holding for dear life. Hodl, hodl, hodl. Hold. Okay. Any more questions? Okay, I hope I've answered your questions, and that's all I have for you for today. Next week, I plan to work on the topic, when to exit a trade. I'm still in the middle of a series of videos of, on a series of videos of candlestick patterns, because those are so important to trading. Like, you were able to identify the dojis. Like, we have that doji right here. I see a doji right here. Look at that beautiful doji right there. And that doji tells you pattern is, the trend is reversing. Good time to enter into a trade. Why not? you know. So I'm working on that series right now, but for next Wednesday, my video for next Wednesday is going to be on the Doge coin and the what if question. What if I had invested $1,000 in 2017 and now Doge has increased 7,000%? And with that, I'm going to bid you all goodbye. Hope you have a wonderful weekend. We still have snow out here, but I still got to go out into this day and get some things done. I hope you all enjoy your weekend, and I'll see you all same time, same place next week, Saturday, 10 a.m. Take care.